Economic Survey 2025, Understanding India's Economic Health. Hello everyone and welcome back to India Business Insights. While a few weeks ago everyone was focused on the union budget, not many people took notice of an important document in our economic calendar, the Economic Survey 2025. Think of the Economic Survey as India's yearly economic report card and the outlook for the coming year and in some cases beyond. It tells us how well the country has been doing, what challenges we are up against, and what opportunities are out there. So, this is obviously a big document. We are covering this in two parts. In this video, we will look at the overall state of the economy, what's happening with our money and financial systems, how we are doing with trade, and what's going on with prices, things that affect all of us. So, in the next few minutes, we will walk you through the key highlights, explain what they mean, and give you the big picture takeaways. The next part will also be published in the next couple of days, and you will find the link in the description box. State of the economy getting back into the fast lane. The Economic Survey 2024-25 is more than just a report. It is a strategic document presented to Parliament by the Minister of Finance and Corporate Affairs, Nirmala Sitharaman, that sets the stage for the Union budget. It delivers an in-depth look at India's economic progress, assessing the effects of domestic policies and international factors. Its importance lies in shaping economic policy discussions and giving a framework for the government's plan for the coming fiscal year. The survey offers valuable insights to policymakers, economists, businesses, and citizens, enabling a clear understanding of the economic environment, its challenges, and opportunities. Global economic scenario navigating a complex world. The global economy saw a 3.3% increase in 2023, and the IMF predicts a 3.2% growth rate over the next 5 years. However, this growth is tempered by geopolitical tensions, trade risks, and ongoing conflicts that disrupt trade, energy security, and increase inflation. The survey likely analyzes specific regional economic trends and their potential ramifications for India. Domestic economy remains steady amidst global uncertainties. India's resilience. Despite global challenges, India's economy remains strong. Real GDP is projected to grow at 6.4% for FY25, aligning with the decadal average. GDP growth for FY26 is expected to range between 6.3% and 6.8%, dependent on external factors. This growth is attributed to strong domestic demand and key sectors like agriculture and services. Key data points. Real GDP growth FY25 6.4%. Real GVA growth FY25 6.4%, same as real GDP. GDP growth forecast FY26 6.3% to 6.8%. Global growth 2023 3.3%. IMF projection for global growth next 5 years 3.2%. Economy characterized by stability and inclusivity on multiple fronts, investing in a shared future. The government prioritizes inclusive growth through public spending on infrastructure and digitalization of services. The Atmanirbhar Bharat Abhiyan aims to boost domestic manufacturing and reduce import dependency. Rural demand is recovering, supported by agricultural output and government programs. Urban consumption remains strong, driven by higher incomes and a thriving service sector. Investment and infrastructure. Capital expenditure on key sectors grew by 38.8% from FY20 to FY24. 2,031 kilometers of new railway lines were commissioned by December 2024. 5,853 kilometers of national highways were constructed by December 2024. Port efficiency improved, reducing container turnaround time from 48.1 hours in FY24 to 30.4 hours in FY25. Renewable energy capacity grew by 15.8% year on year, accounting for 47% of India's total installed capacity. Sector-wise performance. Agriculture expected to grow at 3.8% in FY25, driven by record Kharif production and strong rural demand. Industry projected to grow by 6.2% in FY25, supported by electricity and construction. Services fastest growing sector at 7.2% in FY25, led by IT, finance, and hospitality, contributes 55.3% of gross value added GVA in FY25. MSMEs, supported by government initiatives like the Self-Reliant India Fund, Indian rupees 500 billion. External sector. Overall exports, merchandise plus services grew by 6% year over year in the first 9 months of FY25. Services exports surged by 12.8% year on year. Merchandise exports grew 1.6%, while imports rose 5.2%, widening the trade deficit. Remittances helped contain the current account deficit (CAD) at 1.2% of GDP. Outlook and way forward. Strategies for sustainable growth. The Economic Survey anticipates the Union Budget 2025, highlighting the need to align fiscal and monetary policies for sustainable growth. It emphasizes reforms in taxation, labor laws, and regulations to boost competitiveness and attract investment. Key priorities include managing inflation and ensuring stable agricultural output. Effective implementation of Union Budget 2025-26 initiatives will be crucial for sustainable economic expansion. Monetary and financial sector developments, the cart and the horse. The monetary and financial sector plays a crucial role in India's economic development by facilitating financial intermediation, promoting savings and investments, and ensuring financial stability. This sector provides the framework for monetary policy implementation, credit allocation, and overall financial system efficiency. Inflation trends. Retail headline inflation has decreased from 5.4% in FY24 to 4.9% in April-December 2024. However, food inflation rose from 7.5% to 8.4%, driven by vegetables and pulses, despite price stabilization efforts. Supply chain issues and weather disruptions kept consumer price index volatility high. Core inflation hit a 10-year low with declining service and fuel price inflation. The RBI revised its FY25 inflation forecast from 4.5% to 4.8%, expecting 4.2% in FY26. The IMF forecasts 4.4% in FY25 and 4.1% in FY26, assuming stable conditions. Retail inflation 4.9% in April-December 2024, down from 5.4% in FY24. Food inflation increased to 8.4%. RBI's FY25 inflation forecast 4.8%. RBI repo rate maintained at 6.5%. Monetary policy. The RBI kept the repo rate at 6.5%, shifting its stance from withdrawal of accommodation to neutral in late 2024 to support growth. The cash reserve ratio was reduced to 4%, injecting approximately Rs 1,16,000 crore into the banking system. Banking sector growth. Credit growth remains steady, aligning with deposit growth. Gross non-performing assets fell to a 12-year low of 2.6%, with net NPAs at 0.6%. Financial inclusion. The RBI Financial Inclusion Index increased from 53.9 2021 to 64.2 2024, reflecting significant progress in access to financial services. Capital markets. India's initial public offerings, IPOs, surged six-fold between FY13 and FY24, ranking first globally in listings. India's stock market performed well despite global uncertainties and election-driven volatility. Young investors now make up 40% of the equity market. Capital expenditure. Public capex grew significantly. Public capex grew at 38.8% CAGR FY20 to FY24. Private investment remains cautious due to global uncertainties and regulatory concerns. Risks pertaining to India's financial sector. Several potential risks and challenges exist within India's financial sector. Global factors. Geopolitical tensions, financial market volatility, and trade slowdown could impact India's financial stability. Interest rate fluctuations in the US and European Union may cause capital outflows, impacting India's foreign exchange reserves and currency stability. Inflation. Persistent food inflation could create inflationary pressures despite stable core inflation. Fiscal risks. State fiscal stress from rising subsidies and low tax revenues, along with increasing dependency on central transfers, pose financial risks. Private investment. Private investment remains cautious due to global uncertainties and regulatory concerns. Strategic fiscal and monetary policies are essential to navigate global uncertainties while fostering domestic growth. Governance reforms, tax simplification, labor law rationalization, and decriminalizing business laws boost industrialization. Managing inflation through stable agricultural output and external sector stability remains crucial. Effective execution of Union Budget 2025-26 initiatives will drive sustainable economic expansion. Deregulation through grassroots level reforms will enhance India's competitiveness and investment climate. External sector getting FDI right. The external sector is vital for India's economic growth, influencing trade, investment, and overall stability. A robust external sector enhances competitiveness, attracts foreign investment, and supports sustainable economic development. Global trade dynamics. The global trade environment remains complex, characterized by uncertainties such as geopolitical tensions and economic slowdowns. Despite these challenges, India has demonstrated resilience in its external sector performance. Trend in India's trade performance. Overall export growth. Total exports, merchandise, and services grew by 6% year on year in the first 9 months of FY25. Services exports have been a key driver, increasing by 11.6%. Services exports leadership. India continues to be the second largest global exporter in telecommunications, computer, and information services, holding a 10.2% market share. Services exports surged by 12.8% year on year. Merchandise exports. While overall exports showed positive growth, merchandise exports grew modestly by 1.6%, while imports rose 5.2%, widening the trade deficit. Non-petroleum, non-gems, and jewelry exports. Growth in these exports indicates diversification and resilience amid global volatility. Foreign direct investment (FDI). Gross FDI inflows revived, increasing 17.9% year on year to $55.6 billion in the first 8 months of FY25. FDI inflows into India exceeded $1 trillion between April 2000 and September 2024, reinforcing the country's status as a secure and prominent global investment hub. However, net FDI inflows saw a dip due to a rise in repatriation disinvestment. Foreign exchange reserves. As of December 2024, India's foreign exchange reserves stood strong at $640.3 billion, covering 10.9 months of imports and 90% of external debt. Ease of doing business initiatives for exporters. The government has implemented several measures to promote exports and improve the ease of doing business for exporters. Trade facilitation programs. Strategic approaches to reduce trade-related costs and enhance export facilitation have resulted in a vibrant export sector. Export Promotion Mission and Bharat TradeNet. Initiatives aimed at integrating Indian businesses more effectively into global supply chain, reducing import dependency and diversifying export markets. Efforts to strengthen India's global trade footprint by reducing import dependency, diversifying export markets, and enhancing manufacturing competitiveness. Balance of payments, resilience amid challenges. The current account deficit (CAD) stood at 1.2% of GDP in Q2 FY25, supported by rising net services receipts and increased private transfer receipts. Remittances helped contain the current account deficit (CAD) at 1.2% of GDP. India's strategic trade agreements. India's strategic trade agreements, including those with the UAE, Australia, and the European Union, are expected to further boost exports and attract foreign investment in key sectors such as renewable energy, manufacturing, and digital infrastructure. India's external sector demonstrates resilience amid global uncertainties. While merchandise exports face challenges, Strong services exports and robust FDI inflows support overall growth. Government initiatives aimed at trade facilitation and export promotion, along with strategic trade agreements, are expected to further enhance India's external sector performance and contribute to sustainable economic growth. Prices and inflation, understanding the dynamics. Understanding inflation dynamics is crucial for maintaining economic stability. Inflation affects purchasing power, investment decisions, and overall economic growth. Monitoring and managing inflation effectively are essential for policymakers to ensure sustainable economic development. Global inflation. Global inflation is expected to soften slightly in 2025, influenced by lower food and energy prices, although increasing global trade restrictions could prop it up. World CPI inflation, which peaked at close to 9% in late 2022, had roughly halved to below 5% by late 2024 as supply chains and consumer demand normalized. 2022 peak. World CPI inflation peaked at close to 9% in late 2022. Late 2024, CPI inflation had roughly halved to below 5%. 2025 expectations, inflation is expected to average lower than the 2024 CPI inflation rate, though the slowdown will be softened than in 2024 versus 2023. Regional differences. Asia, expected to see a lowest inflation rate in 2025 due to its manufacturing capacity and sluggish demand in China. G7 economies, expected to be broadly in line with their central bank's 2% target. IMF forecast. Global growth is projected at 3.3% in both 2025 and 2026. Global headline inflation is expected to fall to 5.8% in 2024 and 4.4% in 2025. Key factors influencing global inflation in 2025. Trade restrictions. Potential tariff increases could lead to a tariff spiral, raising world inflation. Supply chain reshaping. The reshaping of supply chains, wider application of tariffs, and unpredictable climate conditions will put upward pressures on prices. Labor markets. Tightening labor markets will keep demand firm through higher wages, impacting inflation. And that wraps up our overview of prices and inflation from the Economic Survey 2024-25. The next video on the Economic Survey will focus on agriculture, investments, industry, and services. So please look out for it. You will find the link in the description after it is uploaded in the next 2 to 3 days. If you have found this useful, please like and share this video, leave a comment, and I'm sure if you have found it useful, you will also subscribe to our channel and opt to receive the notifications regularly.